Welcome Tradespooners, and this is your today's pick. We're actually going over past picks since I was out on break with my family, and we're going to go into see recent picks, and we're going to check out the pick from December 26th, which was on Oracle Corporation, ORCL. And you saw that I got there through going to recent picks from our daily pick, and you can scroll down and you can see now all of the Tradespoon information on this pick for December 26th. You're seeing the long Oracle Corporation risk and reward at 2, which is on the low end of our proprietary analysis here at Tradespoon. And you're seeing the value momentum on the upper end at 7 on that scale of 1 to 10. If you look at the price action, you're seeing that Oracle is trading at that 52-week high or right off of 37.38. That's the 52-week high. And this was the close price on the day of the pick. Now, if you also look at the low end of the range, the volatility and the expiration date, this will help explain more what's going on when we talk about the different picks and the strategies that we're incorporating. Now, you see that the stock trade, we're looking for an entry price of 37.32. Now, what does that mean? That means that you can put in a limit price to enter this strategy at 37.32 buying the long stock. Now the target gain is $4.10. And then as I've shown on past videos, you can actually go in and I just take the handy dandy calculator and you take your entry price, which is $37.32, and you add to get your target gain our target gain amount, which is $4.10, and that gives you your exit point of $41.42 on the stock. Now, if you want to go in and you want to check out what is your stop loss, you can go in and hello Tradespooners, and we're just doing a catch-up on the last picks over the holiday sessions. So we're going to click on see today, and the pick that we want to look at is the pick from the December 26th, which was on Oracle. One thing you'll notice from the recent picks is that there's a green checkbox. That's just identifying that this has the highest probability of success of the current market conditions as identified by our proprietary analysis here at Tradespoon. So let's view the best details. First of all, we're looking to go long Oracle, that's ORCL, and you can see that our proprietary risk reward rating is at 2, so it's on the low end of our calculation, our proprietary calculation, and our value momentum indicator is at a 7, which is on that high end of that 1 through 10 scale. Scrolling down, we look at the stock. Oracle is currently trading right off of its 52-week high, so it's up there beating on that. And if you take a look at the long transactions that we're suggesting here at Tradespoon, you can see that the stock trade is putting it out there to buy at 32.32. Now, we're putting a profit target of $4.10 higher than that entry price, which if you just do the math quickly, and I'm just going to bring up our handy dandy calculator, you just take the entry price, which is $37.32, and I'm going to slide this over, 37.32, and we're actually going to add $4.10. That's our profit target suggestion here at Tradespoon. And you're going to see that we have a suggested exit price on the upside for a profit on a long position on the stock of $41.42. Now, if you go in and you want to check what the stop loss is, or in other words, where we want to cut a stock position if it wasn't working for us, our entry price, $37.32. Now we're going to subtract $4.10. That's how much we're willing to risk. And we would set our stop price at $33.22. Now, for those of you that might be a little bit too wide or whatnot, again, you can go in and start working through your risk and capital management. And as always, feel free to virtually trade these until you get comfortable with actually handling that risk management based on our recommendations. Now, if you want to look at the options trade, we're going to look at buying one of the January $37 calls, and we're suggesting paying an entry price of 78 cents. Now, what is our target gain on this? Well, you'll take your entry price, 78 cents, and you're going to add 78 cents, which is our total target gain. And as a matter of fact, that'll get you basically right at $1.60. It's actually a little bit less than that, $1.58. And we're willing to risk on the downside the whole amount that we're paying for this particular option transaction, which is $78 per contract, and that would be the risk. Our option spread trade, well, this is where we're trying to mitigate some of that purchase price of these calls. Again, this is a bullish position. We're buying the $37 calls. That's what we're buying to offset that purchase price of 78 cents, which is $78 per contract. We're going to sell a $39 call, which is $2 above where the stock is trading, and we're going to collect 10 cents, which gives us a net risk of 68 cents, which is our total loss, and that's our target loss. So we're willing to risk all of that, and our target gain is $1. So in other words, $1.68. You take your debit and you add that target gain. Now, as always, you can virtually trade these option positions as you grow in. And don't ever forget that we have our proprietary stock and key stock events analysis right here, all available right here on this particular page as you're going through and you're preparing to potentially put one of these positions on. And don't ever forget that we have all of our viewing right here. If you need any help, you can always email us at info@tradespoon.com. Thank you, and look forward to seeing you online again.